Hello, everyone, and welcome to this episode of Deep Tech Studio. In 1969 emerged one of the most iconic music festivals that later became an ode and symbol of pop music and, most importantly, counterculture. Woodstock Festival was one of those festivals which actually served the purpose of counterculture in the world. Decades later, it served one more purpose, an inspiration to an emerging tech investment firm. Woodstock Fund was founded on the 50th anniversary of the Woodstock Music Festival. It invests in early and growth stage distributed ledger technology startups and companies. And today we have with us Pranav Sharma, who's founding partner of Woodstock Fund, to talk about the firm, its investment thesis, and what goes beyond mere investment to ensure growth of emerging tech startups. And as they are uniquely positioned as a stakeholder in the DLT universe, let's also gain insights about Web3, the future of NFTs involving enterprises, and the trends they are keen on investing in the near future. Welcome, Pranav. Welcome to the show.
Vaishnavi, thank you very much for getting me here, and such a pleasure to be here. And I think probably I can just start off by acknowledging the reference to Woodstock Festival and the name Woodstock, Fund as well. And if you look at even blockchain, in many ways, it is a lot of similarities here. And Woodstock is a festival, as for many of you who would be probably audiences of this, would sort of remember or may have read about, is that it was supposed to be a very small gathering of people who were music lovers, and they congregated to celebrate and sort of come out of a little bit of a situation which was happening in US at that particular point in time, wherein the whole country was war torn, and in many ways, because there was Vietnam War, there was also anxiety around what's the future and how things are going to shape up, etc. So all of this anxiety, people just wanted to forget about, and they wanted to congregate. And what was supposed to be like a very small gathering became a very large gathering, and it became a movement, and it inspired generations together. So it inspired people to innovate on one side, it inspired people to experiment as a counterculture on the other side, as you're mentioning. It also inspired a lot of people to go deeper in terms of pushing boundaries on enterprises, careers, and so on and so forth, Wall Street, and so on and so forth. It just inspired generations together. In many ways, if you look at blockchain, Vaishnavi, blockchain was supposed to be just a white paper, right? Satoshi Nakamoto, whether it's an individual, group of individuals, we really don't know. But that became a movement over a span of time, and we see so many colors and so many ways in which people are finding inclusion, expression, and across the world, walks of life, diversity, and so on and so forth. So in many ways, we are living in a Woodstock moment or Woodstock movement of the blockchain part of it. So in many ways, Woodstock as a word was coined, because we saw that something like this will happen. This was way back in 2018 end is when we thought that Woodstock was a more appropriate name for this.
Thank you, Pranav. Glad you mentioned about the Woodstock movement, and tell us a little bit about the company, because this is a clear amalgamation of technology and economics, and that is what was the revolution that intended after the 2008 debacle that happened, and your journey as founder.
Absolutely. So Vaishnavi, let's say my own background is financial services, and before that, from an engineering standpoint, I was like there for, let's say, a few years. And in financial services, my experience has been private equity, asset management, offshore and domestic asset management, structured finance. I would say also broking distribution in a significant period of time, and then finally heading SME insurance. So all of this experience happened over a span of, let's say, about 12 to 15 years, and give me a good breadth of exposure and experience on various products, services, complexities of larger organizations, and so on and so forth. But it also made me realize that there's something which is broken in these systems. There is no natural sense of deeper collaboration. And definitely my own sense was, as I looked at technology and as I looked at enabling tools, I realized that technology is going to be an elixir, which is going to create those seamless systems for people to collaborate and converge together. And then I was a big fan. I've been a big fan of emerging technologies, I would say more so in context of open technologies, so Linux, that I was like, okay, fine, this is something interesting because it creates open frameworks when people can build different variants of what they believe would work in their context, right? So I think so all of this was somewhere in the back of my mind, and I was investing to fintech enterprise SaaS in personal capacity to see that, how I can be part of alternate systems, because larger systems seem to be much more inefficient, not because of intention, but because of the design issues. And but I realized that fintech enterprise that I was doing with a bunch of friends, they were also hitting a wall against the incumbents. So in many ways, it was also very clear that a totally different paradigm is required, because this was all about creating more value, wealth, etc. But in many ways, the conversation around the customer, creating applications centered around the customer, was not really happening. I'm very passionate about customer and stakeholders. So in that sense, I was like, okay, this is definitely required alternate and a very different kind of a paradigm. So when I discovered Bitcoin in 2016, it was a ray of hope, because I did not see it from a price standpoint, to be very honest. I did get my first Bitcoin then, but it was more about as an intersection of not only open technologies on one side, but also modern economics or open economics on the other side. And open economics, as I'm sure a lot of you must have seen, Beautiful Mind, a movie, right? So movies like these expound on, let's say, game theory and how different scenario planning and other things actually work. And in many ways, these are some facets of open economics or modern economics, right? So just look at this. That's so fascinating as an intersection of open technologies and open economics. What kind of fascinating spaces it can create is what we are seeing right now as a manifestation in many ways. But way back, the whole thesis was that as technology is going to become more open, economics is going to become more open. And then definitely ecology is going to become much more sensitive. We are not, we were not nurturing, and this was like much pre-COVID. This was in 2016 is when I thought about it. And then definitely, if you look at the society becoming much more individualistic in many ways, yet a lot of deep sense of community was emerging. So it was very clear that all of this, if let's say, is going to create a lot of chaos, because a lot of these are going to be very overwhelming for people, and the intersection of these is going to create a holy grail for investments in many ways. This was in 2016 or something. I mentioned this as Web 3.0 in my own personal, because I was reading Tim Berners-Lee's, you can say expositions. So he mentioned about Web 3.0, 4.0, etc. And this made so much sense that if the world is becoming much more dynamic, much more fragile, then eventually people are going to go through something which is much more agnostic and much more predictable, which is technology in many ways. And from there came three aspects three things that as a fund over a span of time we realized. I would rather say in very early days we realized that three things are going to define as key megatrends. One is convergence, second is financialization, third is virtualization. So in many ways, what we see now happening in deep tech and specifically in blockchain right now is manifestation of these larger megatrends. And that's been what has been driving the fund core thesis. And that has been driving our investment strategy over the past 3 years since inception, early in 2019.
Pranav, when I went through Woodstock Fund in my research, I found out that within the DLT universe itself, your investments or your involvement is into infrastructure, NFTs, and other areas as well. Now, what is your investment thesis? Does it differ for other startups, and how you're mostly investing in early and growth stage startups? So talk to us a little bit about that as well.
So here, Vaishnavi, I mean, I hope there was an easier way to respond to this. But let's say typically if you look at like the 5 T's, right?
Okay.
So I would say definitely the team is very, very important, right? I'll not go through all the 5 T's, but actually very high level right now. So let's say team is very important. Definitely technology is very important. Total addressable market is very important, right? I mean, I'm just saying these are very, timing is very, so basically these things, define in terms of what kind of micro, as in the specific investment decisions, that we take within the fund. We do have a 150-point due diligence process, which spans across business due diligence, legal due diligence, financial due diligence, and also it looks at other aspects like references globally through our networks, etc., before we take a investment decision. But all of this is only relevant if it fits into our thesis. As in a macro thesis, which I just a while back, and the micro thesis, which is more focused on the micro thesis, which is more focused on let's say the specific that I just mentioning about. Let's say if it is infrastructure, DeFi, tokenization, Web 3.2 protocols, right? And so we have made about 40 investments so far, which are, as per our thesis, the right kind of founders who will be solving these problems, and they'll continue to solve for these problems over the next 5 years to category leaders. So that's been broadly our focus so
far. What are the obvious red flags that you avoid?
So there are a few red flags that I've spoken a lot about, earlier. One thing is that retrofitting blockchain into your startup is definitely a major red flag. We have seen there was a wave of startups that did not require blockchain, and they were just trying to put somehow fix blockchain that they could raise money faster. That's a red flag. I think the second red flag is that having very lopsided token economics, so that you don't create win-win-win-win situations. So when I say win-win-win-win, it essentially means that definitely the founder should win. Nothing against it. Ultimately, the founder and the teams, are the people who are building it. They're going to grind their teeth day in and day out. The second set of stakeholders who should win is community in this space. This is very, very important. The community could be anything. Let's say if you're B2B, it's a developer. Developers should win. If you're a blockchain, if let's say you are, DeFi protocol, then definitely your consumers should win, right? They should have superior experience. They should have superior yields, etc. Then the third category is your I would say investors, right? Which is also very important because they were the early supporters of your network. They helped you when nobody was willing to help, right? Or probably you got them because you wanted to, have them to help you, etc. And then final stakeholders is regulators, in my opinion. And regulators, when I say that, it is basically essentially as much as possible following law of the land. Even if even if the frameworks are evolving frameworks, it is very important to align with the you can say the existing frameworks, so that you can build scalable enterprises. Without the necessary support system from the ecosystem, you can't really build scalable, long-standing institutions. That's just not possible. So that's what I believe are four you can win-win-wins. There's one more thing which I would add as a red flag is that if let's say the problem statement is something that like obvious mismatches in terms of the problem statement that you're trying to solve and the commitment that you have as a founder from a duration perspective. So creates a red flag. So let's say typically if something will take 5 years to build out in that way, and if your duration is let's say 3 years, it's just not going to happen.
Pranav, one of the statements on your website was, we don't just invest but work alongside investee companies to create companies of future that are scalable. How do you ensure scalability of these new age platforms, and what goes into the mentorship aspect beyond just investing money? And how do you prepare them for markets that are outside the geographies where deep tech appetite is slightly higher right now?
Yes. No, Vaishnav, you're absolutely right. So there are two things which are happening. One is that the money is a commodity now. So I totally agree that money is just not the only thing which is out there. The second part is that the good founders are basically this too much of money is chasing too few good founders. Let's put it this way, right? So definitely there is a situation wherein let's say value addition and supporting the founders plays an important role. Now look at it from this perspective that the founder requires support at different points. So when they are ideating, they definitely require a sounding board. They need somebody whom they can bounce off ideas in privacy and in comfort. At the same time, those who have necessary skill sets and capabilities to give them refined responses so that they can engineer the right kind of product before they start raising funds. Once they are raising funds, then they don't want only you to be on the cap table. They also want other serious investors to be on the cap table. You have a network of other investors where when you put in a word, they look at it very seriously, and then they subsequently come back with feedback, etc. And then how you will populate a cap table. So that's an important thing. And they have raised, then it is also about other nuanced things like how do they set up their house. Of course, they're parallelly setting up their entities. They're also structuring the treasuries. They're also building their teams. So so this is a typical Web2 thing, wherein you have to help them in terms of, getting some of these things in place. And then once they're ready to list, then it is also about your, connection with exchanges, your guidance on various things around, where and how they should, like how much they should dilute, etc. All of these things, play an important role. But my thing is that even most of the VC funds sort of lose steam at that point. The real actually works, starts from there, because the networks are still not in place. This whole Web3 space is all about building networks, scalable networks. So the networks are still getting there. There's a product market fit, there is reasonable traction, the networks are still expanding, they're still scaling. And this is where they need you the most. And this is where you discover a lot more mutual growth and value. You require, so there, the investors definitely, sorry, the investee companies definitely search for patient capital and proactively, supportive capital, which helps them to grow these networks. And growing the networks could be in terms of connecting with other, founders or other, you can say, helping them to growth hack, finding talented people who have, growth hacked in the past, and a bunch of other things in terms of locationally where they should be for the growth to happen, and being part of various connections and so on and so forth. And then finally, the most important part would be that, let's say, seeking another round of funding, etc. Or at some point there'll be also about some sort of a merger or corporate development. Then how do you play an active role? So this is what needs. So from perspective, try to play a role in the aspect of this journey of a founder, right? So different founders require different things because they have different skill sets and different. For example, I'll just give an example here, Vaishnavi. For example, let's say in case of Elrond, we were the earliest investor into Elrond. So we actually took them to Middle East and we created a forum for them to engage with a bunch of family offices, private offices, CTOs, etc. Let's say similarly in case of Covalent, we helped them in India, which is another portfolio company. We helped them in India to in terms of connecting with a partner for doing hackathons, for creating visibility in India, and being part of various deeper conversations in the tech scene, etc. Similarly, let's say if there is a band protocol, we help them to, these were early days, so we help them to engage with, let's say, various protocols, including Polygon, etc. So how they can integrate various of the DeFi protocols so that they gain some initial traction, initial critical mass. For example, Benki, which is another, you can say, lending platform, which is built on Avalanche, another blockchain. So there we helped in terms of designing their token economics so that they can effectively launch and build a very formidable lending platform. Right. So different things for different people at different points in time. And I'm just giving small flavors of, what we are helping them with. Some of the equity investments, we sit on the board seats, so we nominate other people on the board seats at times to add value to the companies at that particular point, is what they require. So there are many things which are done. But having said that, what we are doing right now is we're building a very structured, you can say, program that whenever a investee company, a prospective investee company engages with us, they literally go through that, with systematic a mechanism so that they can choose and they can actually benefit from the various relationships and connections we have. So we are putting a lot more structure into it now this year. This year is all about structured approach toward adding value and transposability and composability of the learnings and shared learnings, etc., so that the founders benefit as a tribe who are part of a portfolio.
Glad to hear that, Pranav, and thank you for giving us an insight into how you're structuring the activities or the scalability feature for the startups. Now, Pranav, in terms of NFTs, yes, it has shaken up the art world, and there is a lot more to do in that space. But what do you see in the future for NFTs for enterprises, or how it can be a huge asset in terms of data sharing or anything else that you want to talk about for sensitive and unique sectors like manufacturing or for the BFSI?
So I think first is, if you look at NFTs, non-fungible tokens essentially are, very unique in many ways. And that's why JPEGs and, all of these art forms, that you see have manifested as a first, port of call, right? So these are very early, we can say, applications, phenomenal, There's no doubt about it. And this is like massively scaled up, and huge volumes on some of the platforms like OpenSea. Um, but as you rightly are hinting at, this technology itself has multiple applications, right? So NFTs can definitely be utilized for supply chain, because this is a very unique. It's almost like a unique piece of cryptographically secure, you can say, digital asset, which can be transposed from point A to point B, point B to point C to point D, and probably back to point A, and that sort of a supply chain way of building it up. So definitely there are experiments and things which are happening on supply chain side, but you're not seeing some really large scalable applications yet right now. But I agree with you that there's a massive play there. One of our portfolio company, Persistence, has taken an active interest and focus on this. They are one of the largest, you can say, torchbearers of Cosmos, which is another blockchains ecosystem as well. We are very bullish that eventually they will end up cracking and doing a lot more in this space, as and when the enterprises start becoming much more open to engage with public blockchains. So that's that's on one. The one other thing is I'm more bullish on games and gamification, because the thing about games and gamification is these are very complex, you can say, applications. So it creates a space in which a lot of experimentation can happen, and a lot of different kind of visuals can be created. A lot of intellectual property can be sort of exchanged very seamlessly, monetized, and so on and so forth. So a lot of this gamification and games will create spaces in which a lot of enterprises, traditional enterprises, traditional finance, will engage, and even the blockchain, crypto finance, etc., will engage and create a more immersive experience. So I'm more bullish on metaverse as a space to create for it. And yeah.
Thank you, Pranav. Sure. Thanks so much, Pranav. Thank you for elaborating on that. And yes, Web3 is inevitable, and we'll see what more can be done and what more will happen in this space. And thank you for sharing your insights on investment thesis, on NFTs, and on how startups can be scalable with little more push in terms of mentorship and not just investing money. Thank you so much, Pranav. Thank you for taking time out. We're grateful to have you on this episode.
Absolute pleasure, Vaishnavi. Thank you very much.